What if I told you that in just 90 days, one of our clients went from owning 0 properties with us to 3? Most new investors spend months, even years, trying to land their first investment. But in this video, I'm going to show you exactly how a client built his portfolio in record time and what you can do to learn from their strategy. So here's the 3 properties. Property 1, property 2, and here's property 3. Buying multiple properties in a short time isn't just for seasoned investors. It's possible for beginner investors with the right system. This client's journey shows what can happen when you combine clarity with action. But before we do that, here's the backstory of our client, as it's probably a question you may be asking. Our client felt stuck and unsure of where to buy. You see, they'd invested previously in a couple of properties using what can be best described as a dubious service. Unfortunately, they and hundreds of other investors were attracted to big, large headline numbers, but in reality didn't get paid, and the service company actually liquidated. And they found numerous horror stories: large repairs, rents not being paid, or paying a lower rent, and even some tenants just literally upping and leaving from nowhere with no notice. So when they came across my team and I, they obviously had their guard up and had a lot of questions. You see, our client isn't a multi-millionaire with millions of pounds to waste, but a recent retiree who is growing a portfolio to build generational wealth for his children and his grandchildren. Now, after flirting with us for about 6 months, they decided to move ahead and completed on 3 cash flowing properties in record time. So let's start off with where these properties and how they meet finance. So firstly, it's been bought in an area called the Northeast. The Northeast has a really good quality. It's an up and coming location and region in the UK. Part of that had a capital growth gap. So in the last 10 years, a lot of areas in the UK, London, the Midlands, have gone up in huge record numbers in terms of capital growth, whilst the Northeast has just been trickling along at a far below expected capital growth. Actually, over the last 10 years, on average, it went up 33%, whilst really, based upon a loads of history, the last 100 years, the average growth rate should have been 66%. This had this capital growth gap. Now seeing that gap being closed by billions of pounds of money coming into the area in terms of regeneration, new employers, and more jobs being created. And in terms of how it was financed, our client has just refinanced several of their current properties to then reinvest into the Northeast. So the first property purchase was a 3-bed semi-detached property. So let me give you some context. This is in an area where it's really close to Hitachi, which is a blue chip manufacturing firm. It's an area where it's got strong rental growth. It's actually coming tenanted with income from day one. So let's look at the numbers. For this particular property, our client bought it for £51,000. And there's 3 options. So option 1 was keep the current tenant, don't change the rent, and just do a light refurbishment of £2,000. And option 2 was to refurbish it with a bit more added to it, and that's primarily upgrading the kitchen. So that estimate on the refurbishment was £7,000. Option 3 was to actually spend £10,000. So that's actually including redecorating the whole property plus upgrading some parts of the bathroom too. So 3 options: 1 at £2,000, 1 at £7,000, and 1 at £10,000. And at the £2,000, current rent on that property is £400 per calendar month. And option 2, the rent would increase to £595 per calendar month. And option 3, the rent would actually go to £750 per calendar month. All 3 options, the yield is above 10%. For example, option 1 is 10%, option 2 and 3 are above 12%. What makes this property even more valuable is because the value based upon the refurbishment, the end values would go to £70,000 to £80,000. So our client is actually sitting on £15,000 plus in equity from day one. So our client is actually got a benefit of £15,000 of equity through even doing a minimal touch up to doing even more through the £10,000 refurbishment. Now for this particular example, our client has just kept it simple. They like the fact that they've got instant income from day one. At some point in the future, they might look to do either option 2 or 3, but they're sticking with option 1 and getting a really healthy 10% yield. If you'd like to see how we can help you build your portfolio just like this, click the link in the description below and book a strategy call today. Don't just dream about building generational wealth and strong income. Let's map out your first steps together. So let's move on to the next property, property 2. So it's a 2-bed mid-terrace property and it actually comes tenanted. Even more positive thing with this, as well as the income from day one from it being tenanted, it was recently refurbished just about 6 to 9 months ago. And it's a really good location, sat between several cities. It's a nice commuter town, so it's got access to Durham, Sunderland, Newcastle, already strong cities within the northeast. Let's go into the numbers. So this property was purchased for £57,000. The current rent is £500 per calendar month, and the yield based upon that is 10.5%. Now, our client is buying with a mortgage, and based upon a mortgage, their net return, rental return, is going to be a really healthy 14.7%. So what's really good is that this area has gone up in value, both in terms of price and rental valuation. So at today's rent, it's 500, but it has the potential to go up to £595 per calendar month, which would then boost the yield up to 12.5%. Really, really strong. And when we factor in that he's buying with a mortgage, what that would have as an impact in terms of potential return on rent, that is our potential rental return. That's gonna go from 14.7% to 19.8%. Really, really strong return. The value of this is that the property is worth £70,000 plus. So our client is sitting on £13,000 instant equity, and we've seen properties now selling for £75,000 as well. So it's £13,000 to £18,000 instant equity. This is a home run investment. Can't say it comes along all the time, but our client moved quick, he invested quickly, and now he's getting a really strong return on property 2. So let's move on to property 3. So it's a 3-bed end terrace property, comes vacant, and similar to property 2, it needs no work done to it. So the seller of this property, they've done some sprucing up to the property in terms of upgrading the kitchen and repainting throughout, so it needs nothing doing to it, apart from spending a few £100s on just landlord compliance. So in terms of numbers, now let's get into it. It's a purchase price of £53,000, and it's gonna rent for an estimate of £550 to £600 per calendar month. The property is worth around £60,000 to £65,000, and remember, it needs nothing doing to it, so sitting on up to £12,000 instant equity. Now, in terms of returns and yields, it's really, really healthy, because it's a 12.5% to 13.5% yield. Really strong. Similar to the other property, they're using a mortgage, and this return, based upon just hitting a minimum of 550, will be 15.8% return. And they've only had to invest £22,000. Not bad return for the amount of capital employed. So using our tried and tested system, we've helped our client by pinpointing high yielding areas, giving access to pre-vetted deals, as well as access to our network of professionals to streamline the process. And the result, a property value of £220,000 with about £45,000 instant equity, plus a gross rent per month of just over £1,500 per month, rising to just over £1,900 with a few months of patience and activity with the letting agent. 3 properties in 3 months, proof you can scale fast. But just as key is knowing where not to invest. So watch this next video where I reveal 3 areas to avoid to keep your money safe.